Good evening. Welcome to Money Matters. I'm Charlie Shields, Wells Fargo Advisors, LLC. My co-host tonight is Richard Sichel, the Chief Investment Officer of Philadelphia Trust Corporation. And Brian Corcodilos is going to be our special guest. He's a principal at DesignBlendz, and we're going to get some insight into the real estate market that I know a lot of you folks are wondering about. So it's going to be a good show. Stick with us. Richard, how you doing? Good to see you again.
Nice to see you, Charlie. Hi.
Hi. Okay, let's talk about all this turmoil, and I want to remind our viewers and listeners we're not accountants, we're not lawyers. We don't want them to do any market timing based on what we say here because the show is taped, might be shown different times, different places. Besides, we don't know which minute to buy a stock. So having said all of that, to make the compliance people happy, let's talk about the turmoil in the markets lately, and how do you take a client bringing in a serious amount of money in a turbulent time and get them worked into the market?
Yeah, good question, and I do get it right every minute, by the way.
I'm sorry, I forgot.
Believe that one. Yeah, I mean, you want to get people invested. You want to do it over a reasonable period of time, which, how do you define that? I'm not sure, but whether it's a couple of months, some of it depends on really how volatile the market is right at that point. But I would say you can always find some industries or sectors that look underweighted right at that point, and some good stocks, and just start to make positions. And even if you do a 1 or 1.5% position in some companies, get it going. You might average up, you might average down, and in a period of a few months, you should have things invested.
Yeah, good. I think that's important because a lot of clients get upset if it's turbulent market and you give them some money and all of a sudden you're 100% invested, that's the day to get in. And
it's easier to do it that way, but
yeah,
that's not the way we should do it.
Good point, good point. Okay, well, I know you focus on stocks and bonds and exchange traded funds, that sort of thing, but I think I've gotten a lot of questions lately about mutual funds and annuities and all that. There's these shows on TVs telling you can't lose money and all this sort of thing, and people are asking me. So I just want to talk briefly from a very 100,000-foot level about annuities. You need to really get a lot of information if you're going to invest in that stuff. And I tell my clients, look, there's usually costs embedded in that sort of thing.
Pretty good
And
ones.
unless you need, a belt and suspenders and a double guarantee type of thing that you're going to pay a lot of money for, in general, don't go to annuities. And with mutual funds, one of the things that people have to understand in times when markets go up 300 and down 400, if you're buying a mutual fund and the market opens down 100 points and you call your advisor and say, I want to buy that mutual fund today, if the market closes up 400, you're paying a lot higher price than you thought you were paying for it. Do you have any comments to make about any of that?
Yeah, and ETFs can get around that, obviously, and individual stocks. We use all individual stocks and bonds, but what you're saying is very sensible. And yes, with volatile markets like this, you could get your order in at 9:31 and it'll be taken care of at 4 p.m. So you may not be comfortable that way. And again, I think it goes to being a long-term investor, and don't be fixated on, hey, the market's up 200, down 200. It's tough to back away from that, but keep the long-term in mind. But that's a good point about the funds and the annuities too. Personally,
I find the clients that do the best are the ones that find out what the market's doing by checking their statement every month or every 3 months.
It is very, very true. And I was just telling somebody, I've been in the business for at least a few years now, and I used to have clients who would call me in the middle of the day and ask me what the market's doing. Nowadays, they might know more than I know right at that point what the market's doing, because they're so just into the minute-by-minute trading, and it's not the right way.
Yeah, and you've hit this before to a certain extent, but there's a smart money index that says don't believe what the market's going to do based on the first half hour. Sometimes people react to an earnings disappointment and they'll sell their stocks off in the morning, and by the end of the day, cooler heads have prevailed when they're taking a longer view. So do you have any particular opinion whether there's a better time of day to buy a stock or sell a stock, or how do you treat your entry points into these stocks like Google and the FANG stocks, that type of thing?
Yeah, I mean, it's not the time, especially before the open and you hear that the futures are way up or they're way down, and you do something based on that. you have no control then. You don't know if the certain stock that you like or don't like is going to be up or down 5% or 10%. So that's not the way to do it. And do it in the middle of the day. And the FANG stocks, Facebook and
Netflix,
Apple, and Netflix and Google, which is Alphabet these days. So that confuses the whole FANG thing, by the way. But yeah, I think the worst is saying, hey, get me in before the open because I hear things are terrible, I hear things are great. That's not the way to do it.
Yeah, sure. Okay. We alluded to ETFs earlier, and one of the advantages with an ETF is if you have a reason that you think the banking stocks are cheap that day, you can go ahead and purchase right there as though it was a stock, and you're getting a collection of banks, right? As opposed to the mutual fund purchase being at 4 o'clock. So are there disadvantages also to an ETF versus a mutual fund?
Well, we typically or always use individual stocks and bonds, but I have more comfort with ETFs than with mutual funds. I think they're more transparent as far as the fees. And again, you can be trading them when you want. Again, I think investing would be the word, not trading. But again, because mutual funds, as Charlie mentioned, you have a certain time at the end of the day, and I don't have much comfort with that. And ETFs, especially, if you have, it would depend on the comfort level of how much you want to invest. But there's an ETF for everything. It's grown like wild. And it's a good concept, basically. You're not going to know what you own. I don't think you're going to know hundreds of stocks, but it's also a way to get invested in various sectors and maybe, some overseas plays too.
Well, a current example, and I'm not trying to time the market here, but if you look within the energy sector, back a few months ago we had a big drop in the market, and then recently we retested that low. And it's interesting to see a few energy stocks are well above the low that they hit back in August of last year, and a few energy stocks are still going lower, even though and when you see the stocks where they're 10 or 15% higher, even though oil went 20% lower from the first point to the second, that tells you something about the strength of that stock. And if you're an ETF, you have all of them. You have the ones that are making new lows, and you have the ones that have shown they've got the strength to survive.
And you don't know what names you own, and you don't know what percentage you own. I mean, you can find out. I'm saying you can't find out, but you're probably not going to.
Yeah, and I believe when you have a market drop, Bill Miller was on this morning saying that he really gets worried when the market's way up because he knows it's coming down, and he just loves to be in an environment where he's got cash and the market is down. And at times like this, when you get a test of a low, you can see which stocks are actually internally improving, and you can go after some of those, right? Is that one of the things you look for?
And they're on sale. You like a stock at 40, and for no reason other than maybe China said their growth is a little less than expected. I'm not sure we believe what they're saying or that they have any idea how much their growth is. So I wouldn't be selling good stocks on things like that, even oil movements. And again, all these things feed on themselves, either too much optimism, too much pessimism. And so I think you sort of move away from that, and on days like that, buy some good stocks that are 5 points cheaper than they were the day before.
Sure. And while we're talking about sectors in trouble, let's talk a little bit about the commodity stocks. Every year for the last 4 years, people have said, okay, now here's a bottom, and they've tried to buy, and here they are where just nobody even wants to try to buy a commodity stock. So the ones that provide fertilizer or what have you, is that an area that you're looking at right now?
It's an area worth looking at. It's very volatile, and again, China comes up again because, yes, they have grown at a rapid pace for a lot of years with so many people. So that was a big part of the reason why commodities went through the roof.
Sure.
And so now they've been going the other way for a while, and again, it's better to have some opportunities that way rather than when it's easy and, hey, everything's going up, let's buy it. That's easy. It's a little tougher to buy them when everybody doesn't like them, but that's the way to be a long-term investor.
Okay, and speaking of commodities, I've heard a lot of comments lately about, well, it's okay to start fishing with the emerging markets as long as you stay away from China. And other people say, stay away from emerging markets until there's a clear sign they've turned. How do you feel about that kind of a thinking?
Yeah, well, I agree with all those things. We invest only in U.S.-based companies, and there are times that I've I had people say, well, geez, I remember about 5 years ago, the BRIC countries, Brazil, Russia, India, China, that's where all the growth is. So, well, our Procter & Gambles and companies like that get half or three-quarters of their growth overseas. We feel better with their accounting. We trust them. We know who they are. We'd rather get the growth that way. And all four of those countries have had some problems in the past number of years. So, the bloom is off that rose too. So again, we feel better with, basically large and mid-cap companies, U.S.-based, and you get plenty of exposure overseas.
One more question before we help a viewer. Speaking of stocks like Procter & Gamble that have overseas exposure also, because people have been afraid of what's going on overseas, you'll see some of those great companies trading at 20 or 22 times earnings when others are trading at 10 or 12 times earnings.
Mm-hmm.
Do you get nervous when you see those high multiples on those stocks that have served so well?
Yeah, I mean, you can, and if you sort of say, if you can sort of rationalize everything, then that might not be the best thing too, to say, oh yeah, this is 25 times earnings, but we think they'll grow more than anybody else thinks. It's possible, but it's better to have some discipline, and if some of these stocks get overpriced, and again, everybody wants them, maybe you can let them have them and look around some more.
Great, great. Well, let's try to help one of our viewers. Ralph Whitman of Pottstown says, what does a payout ratio of 40% mean?
A company is making however much money and they pay a dividend. So if they're making $1 million and they're paying $400,000 in dividends, that's a 40%. So you don't want a payout ratio that's too high. It's just like sort of being in debt with yourself. You don't want it to be too high. And utilities typically can do that. Some of these growth companies, they have relatively low payout ratios, and so they can then afford to pay the dividend when things don't go the right way, and they can afford to increase the dividend. So watch the payout ratio. It does mean something, and not a magic number, but if you hear 70, 67, 80, you might not be real, let's say, secure in what the dividend payout is because they might be cutting it.
And I know there's a lot of other things that you look for, like if it's a lower payout ratio, but are they increasing the dividend each year and showing that strength? And they've had decades of increasing their dividend is a good sign.
Definitely.
And the high payout ratio, if it's a real estate investment trust or something, well, then they have to because of the rules. So it's not a simple thing. So consult your own financial advisor.
Yeah, there are times a 2% yield is better than a 6% yield because it's secure and it'll grow. So that's
good.
Good point.
So if you viewers and listeners have a question, we're going to show you how to send it in to us.
You can have your questions answered on Money Matters. Please go to our website, money-matterstv.com. On our homepage, click on the banner on the right that says, Send us your questions. While you're on our website, you can find information about our host and guests, as well as show notes and links about this show and past shows. Money Matters is also available as a podcast on iTunes and Stitcher, so you can listen to Money Matters while you're on the go. That website address, again, is money, M-O-N-E-Y, -matters, M-A-T-T-E-R-S, TV.com.
Brian, thanks for coming in. Welcome to the show. Good to see you. Thanks for being here.
Thank you. Appreciate it.
So, Brian, tell us what DesignBlendz does in the real estate market.
Sure. So, DesignBlendz, our company, has been around here for past couple of years. We help our clients create, visualize, and develop the built environment. A lot of our clients says, what does that mean? So we pretty much offer a la carte services from somebody finding a piece of property all the way through handing off a set of keys for their end home buyer. There's a lot of things that happen in between, and we offer services in an a la carte way to a bunch of our clients.
Both commercial and individual?
And residential, yep.
Okay.
So, yeah.
Oh, I thought it was all commercial. Okay.
Learn something every day.
You're right.
Yep.
Where are you based?
So right now, we have a couple offices. One of our offices is based in Manayunk. We also have another office up in Northern Liberties right now. The office in Manayunk operates mainly with the design side and marketing, and the office in Northern Liberties helps clients or developers acquire off-market properties as well.
Do you find that people are looking for do everything for us, get us from here to there, or is it? I guess it's a mix.
Yeah, it's a mix. Honestly, it comes down to the client we're working for. Some of our clients, we work with architecture firms, we work with developers, we work with just real estate investors, even residential clients, homeowners and small businesses. Typically a developer could come to us at a point where they're thinking about buying a piece of property and go, what can we build on there? How big of a structure, how many units can we get on there? We can do a feasibility study. Then there's also the point of, I already have my drawings done, or we did it for them, and I need to market this. I need to pre-sell and pre-lease the new construction that's going to occur. So they could come to us just for a set of marketing materials, 3D renderings, animations, things to start to pre-sell and pre-lease the real estate.
Okay, well, suppose you got some dummy like me that thinks I know something about real estate, okay? And just discuss what would happen if I went off on my own and didn't know how to do computer-assisted design and 3D modeling and all that. What would you do for me that I probably wouldn't get done by myself if I'm going to buy a house in, let's say, Jenkintown next year?
Would you want to remodel that house?
Sure, I'd be willing to.
Because you need an addition, right?
I know I can get a good deal up there because it's cheaper than the main line. So I say I'm looking at 3 or 4 places and I'm thinking about buying these. And how would you help me?
Sure. So I think one of the things that we instantly would do, let's say if you're looking to redo a couple of rooms, we would come in, do a survey of your house, right? We'll take it down, we'll draw it up as is. We'll start giving you design options. We'll start showing you exactly what that's going to look like before you build it. We'll then take that with our drawings. We'll help you bid it out to a reputable contractor. We can even assist you dealing with that contractor, or you can use us to build it for you.
Oh, okay. So you actually do the construction.
The general construction as well. So we're the GC on our jobs.
Interesting.
Jobs.
Now, is that considered a small job, I guess, or
average?
Or
that would be within our wheelhouse at the moment, doing renovation type jobs.
What would be a big job, or what has been one of your bigger jobs?
One of our biggest jobs that we did internally, we rehabbed a 4-unit apartment building up in Easton, PA, actually. The property had been sitting vacant for 20 years. No one knew what to do with it. The first floor was zoned for commercial. The second floor was 2 apartment units up there. And a developer would come in, buy it, sit on it, do nothing with it. And it was great. We went in there with a different eye. We immediately bought it. We rezoned it for all residential units, and we rehabbed the entire place and pre-leased it all out, all 4 units.
And I guess part of your expertise is knowing whether you're going to be allowed to do that.
Correct.
Because you want to find out that the politics are too hard, right?
Exactly. You're studying the zoning code. You're studying the local codes. What can be built there. Do you need a fire sprinkler system? Yes, we do, because it's over 3 units, and that's the code. But most people might go into it saying, oh, I don't need it, and now it comes to a time for a change order because their permits came back and now they've already acquired the property and they need a sprinkler system for their building. And
so you were the total entrepreneur there. It wasn't somebody, hey, I bought this building, I don't know what to do with help.
No, correct.
Your people found this and said,
people found it.
Let's do it.
We studied it. We knew exactly what we can do. We managed the construction of it. We bidded it out to another GC that helped us get it done. And we actually had the leases and leased it up for our tenants that are currently there. So,
okay. Well, suppose someone comes in your door and they say, "Look, from 2009 till now, I made a lot of money back in the stock market. It's starting to get squirrely again. Here's $5 million that I'd like to put into real estate to diversify.
Yep.
I don't know a thing about it. How would you help that person?"
Great. So, first thing we would do is let's find them properties. Let's find something that makes sense. Typically, one of the trends right now is people just like that. I want to get into real estate. What do I do? Number one would be, let's find you the property. We're going to estimate the construction costs for you. Let's just say we typically know a rehab in the city right now costs about $85 a square foot.
Wow.
Right. So we can, all right, you got 1,000 square foot house. We're thinking, somewhere in the ballpark of 85 grand to rehab that. Just high level thinking, right? Not going in there and then doing the drawings and everything else. So then we would then help them acquire the property. They would buy it. We would then do the design for them. We'd help them through the permitting process if required, if it wasn't just some cosmetic things, and then we could help them manage the construction for it.
Okay.
And pre-sell it too.
So you're building their portfolio like when we buy their stocks and bonds.
Exactly. Yep.
Okay,
So
I didn't realize you did that.
Yep.
Yeah, and I've kind of lost track in Philly. Can you still get this 10-year tax abatement on certain properties? Does that have to be brand new property? How does that work?
So that's interesting. I actually just sat through a lecture by somebody at one of the networking events I go to. And he was talking about 10-year tax abatement. He was actually a lawyer that specializes in it.
Mm-hmm.
And one of the things he's saying is that it is a thing, and it actually, it might equate out to $7,000 to $10,000 over those 10 years. But I know
Per year?
No, like the entire piece of it,
Oh.
for like a single family home.
Oh, I got you.
But he was also saying one of the interesting things you have to be careful about is they've been offering this tax abatement for a while now. Properties are coming up for sale for decent pricing, but they might have a year left on their tax abatement. So after that 10-year, they're going to reevaluate it. Surprise, here you go. So that's definitely something to keep an eye out for when people are looking to purchase properties.
Okay.
Yeah.
How many employees do you have to do all this, or
So
lots of computers?
No, it's a
and
great question.
Lots of
we have
productive people.
We have more computers than people, actually. It's really funny. But we have right now within our company, we have about 10 to 12 people. It fluctuates. We have a bunch of full-time people. We have some interns that come in. And we also have contractors that work with us as needed. We have a project manager that deals directly with our development projects. So I guess breaking it down on the acquisitions, helping people off market deals, we have 3 people there. We have 6 people in our office day to day in Manayunk, and then we have another guy outside who handles our project management. And we bring in consultants at night sometimes to help us get projects done, especially when we're working for big architecture firms that need drawings done too. So
One of the things seems to be holding back the real estate market is banks, all the red tape and the regulations on their loans.
Yep.
So if somebody comes to you and says, I want to do a $10 million property, I'm well-heeled, I got a lot of money backing it up, but I only want to tie up $5 million, and I want to borrow $5 million to do this project. Can you help them in some way?
Yeah, and typically, what we've been seeing with some of our clients, they'll come to us because they're doing exactly that. They're trying to get a project funded, take it to a bank and say, give me the money.
Yeah.
What we do to help them is on the feasibility side. We can help them do quick conceptual sketches, put together, all the floor plans, how many units we can get in that apartment, and it allows them to go back and run their numbers, how much they're going to be, and then we can help assemble, renderings and things to show the bank to get this project moving.
I suspect these days one of the things you have to tell them, if they want 5 against 5, you have to say, I'm sorry, you're going to get 2,
Yep.
right?
Yep. Yeah, no, it's definitely, we're enjoying how we're helping people invest in real estate and changing the game in a way.
You must have a great network of people.
We do.
Yeah,
Yeah,
I guess you built that, and
yeah, we have a power team behind us, and outside consultants too, and
Right.
other firms we team up with. And, it's not, I can't take all the credit. It's not me. It's not that we have a lot of very talented people that work
do you
for
do any
us.
kind of marketing? Is it word of mouth that gets around?
Mainly right now, our company is word of mouth. We've worked with over 150 different clients around the Philadelphia region. We've worked with single family. We've worked on roof deck projects all the way up to casino projects. So that's been pretty rewarding to us, being brought in at different phases for our clients in an a la carte way. It might have been a rendering we did for a roof deck or documentation set we did for a casino, right? So it varies, and that's what keeps it fun for us and the people that work for us.
I think location's been an important part of real estate forever. So, and I don't want to get you to say one area is bad or one area is good. Let's just phrase it this way. What are some good areas that you're looking at that you think might have some appreciation?
Yeah, that's a great question. Right now in Philadelphia, I have a client that says the closer you are to William Penn, the better, and that's very true. Even in some of the areas that are developing on the north side of Philly, there's a lot of work being done. We're doing projects in almost every zip code of the city right now.
Okay.
So I can tell you that real estate in every area is moving in Philly.
So you're pretty much focused in the city, the work you do, to a greater extent anyway?
For other people, yes. Our own personal development projects, we're focusing up in the Lehigh Valley. We have done some stuff in Philly, but we like the Lehigh Valley only because it's an hour from New York and an hour from Philadelphia.
Okay.
They're investing a lot of money in all those, and it goes Allentown, Bethlehem, Emmaus, and Easton, right? Those are the 4 up there, Easton being the closest to New York. Our projects are primarily based in Easton.
Have prices started moving up there?
Yeah, they have, and honestly, we like that area because it's a lower end market. When we're selling a property up there, it's they're 150,000, right? We're not doing new construction homes in Northern Liberties at 600,000-700,000, and it's definitely caters to new home buyers, right? People that just graduated college, looking to move in with their fiancés and things. So we found it to be very successful.
So that challenges your creative skills up there, right? Taking some, like you described one earlier project, making sort of a nice lemonade out of some lemons.
Yeah,
right?
the one we're actually working on right now up there, it's a semi-detached. One side's a duplex, one side's a single family. It's fire burnt. If you pulled up the address on Google Earth, you could see it had the fire damage. We were literally gutted it all the way down to the studs. We already pre-sold off the duplex. We already have a buyer for that, a signed agreement, and then we're marketing the single family right now to pre-sell it.
Fascinating.
So
Are you an what's your background?
Yeah, my
Seems like you know a lot of different facets of the business.
Yep. So my background, I have a 5-year bachelor's of architecture from Philadelphia University, and you know I got into architecture. I loved it. I really liked the design portion, but what I found most exciting about it was the business side of it and how you can structure deals with people and how you can help others get things built in this world, and that was the most exciting to me. Then I wanted to put together a process that could take it from start to finish completely. And make
Okay,
that
with
happen.
90 seconds remaining, suppose you had 5 young entrepreneurs that came to you and said, we want to work together as a group, and they call a hui out in Hawaii, and we want to, pool our money to make things happen. What advice would you give them sort of get them started and then to help them as they move along the way?
I had a good mentor tell me, on the real estate side, run out in front of traffic. Right, that's what I was told by one of my mentors, very much older than me, does a ton of real estate. Run out in front of traffic. I like to rephrase that. You could jump in the pool, or you could just dip your feet in it, right? And understand if it's hot or cold.
Yeah.
But there's all different ways to invest in real estate. You got to find what's comfortable for you.
Yeah.
But most importantly, I think it would be building out the power team around you. You have to find people. Either a company like ours or it could be an individual investor that has some experience helping you through the process, at least for your first one. And that'll save you tons of time and money.
Well, in naval aviation, we call that advice, no guts, no air medal. So I guess we're thinking alike on that one.
Yep.
So 30 seconds. Richard, you got something you want to add?
I mean,
All right.
great guest and great business.
Yep.
We appreciate you coming in because most of the time we're talking about the stock market and real estate is becoming the opportunity people are trying to figure out right now. It's an exciting field, and we really appreciate you coming in the rain today to give us some insights. So it's been a great show, and we thank you for being here.
Thanks so much.
Okay, so our guest next week is going to be Ken Jordan of Freedom Mortgage, and I guess you know what Freedom Mortgage does, and mortgages have been tough to get lately. We'll find out if things are a little better right now and mortgages are more available. So stick with us. Join us next week. As far as we're concerned, your money matters.